My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multimillionaire. This is my trading game plan. Hey everybody, my name is Gareth Soloway. This is my trading game plan. I'm the chief market strategist here with verifiedinvesting.com, and the AI trade could be on the verge of being over. Now listen, AI is going to change our lives, but now we have a scenario where Nvidia is significantly off its all-time highs, and the second biggest semiconductor company, near $2 trillion before today, is now falling significantly on the back of their earnings. AVGO, Broadcom is the name. Now, Broadcom beat earnings, beat revenue, gave good guidance, but margins are starting to see pressure as more competition swells. Now, this is going into Rivian. So you might say, well, why are you bringing up an electric car vehicle maker, Rivian? Because Rivian said yesterday they are going to be creating their own AI chips. All right. More and more companies are creating their own AI chips. That means they're going to be moving away from relying on the Broadcoms, on the Nvidias, and all the rest of these. And that will continue to pressure margins. All right. Let's jump into the charts here as we always do at Verified Investing. Number one, we have a futures market where we're basically flat going into the open on the S&P. If we look at yesterday, where did we close? We closed right here. All right. And again, you can see this was after hours initially there. Broadcom, by the way, initially rallied on earnings, which pushed the futures up, and then it collapsed back down in the after hours. We'll take a look at that. So again, really, we were seeing the futures following Broadcom, and then overnight, the futures came lower. But again, as always, and yesterday, if you remember in yesterday's game plan, we saw the futures rallying up as well going into the open. Then we had a dump out in the first 30 minutes or so before the markets floated up the rest of the day back to the flat line. Looks very similar today. Let's see if we get that initial sell-off. And then on a Friday nearing the middle of December, do we see a gentle float into maybe an end-of-month Santa Claus rally? We'll have to watch and see. But right now, S&P futures are flat on the day. Let's flip over to the S&P 500 and do a check-in on this. So the daily chart yesterday, we did push up here on the S&P closing around 6,900. All right, so number one, that's fine, right? We knew that this was a good possibility. I've talked about this as a potential bullish consolidation pattern. What I've been pointing out the last few days is that the upside is very limited because you have this massive resistance level that has literally marked every high on the market right up here. We're only 1% away. So even with a Santa Claus rally, and listen, by the way, I've traded long enough where not every year do you get a Santa Claus rally. There's been times where we've actually seen significant sells into year end because panic jumps up. Don't think that'll happen this year, but we just always want to be realistic and aware of the risk. My point being, even if we float up into year end, it's unlikely we're going to get more than 1 to 1.5% upside, which would take us right up into this trend line. Now, if we break above that, it's a whole different ball game. But if we go to our bigger time frame, this is why it's so significant. Because again, what we have here is every major low is the lower band of the parallel right here. And then, of course, we drag that parallel up to the bull market highs of 2021. And even this little pivot top right here. And that, again, we've seen a pullback and now we're bouncing back. We would have to assume that price will struggle at around the 7,000 mark. By the way, that's kind of where I think we could go as your max upside would be the even number of 7,000 into the Santa Claus Christmas period. That would be great for the mainstream media to get out their pom-poms and cheer the market on, getting the retail investor even more bullish before we see a decline in January. Again, don't know if it'll happen, just bringing up possibilities into months and year end. All right. So that's where we are at this point, guys. If we flip over to the NASDAQ, this is a really interesting chart. Yesterday, the NASDAQ still ended down 1/3%. And you can see, again, we have this trend line right here, which we keep on hammering on, but so far have been unable to break back above. If we do go up, we can see, again, this is a higher level than over here, but we still haven't gotten back to the NASDAQ 100 highs that we saw back in October. Why? Why, again, is the NASDAQ struggling? Because money rotation, okay? So the S&P is very near all-time highs. That is, again, a result of money coming out of tech stocks, the Magnificent Seven, and moving into other names. This has been something I've been kind of pounding the table on, saying, guys, start looking at these beaten down plays that, again, have not participated. They are going to see money rotation as these fund managers start to look for deals. They want to move away from the overcrowded AI trade into these other ones. And again, that's where AVGO comes into work. And even NVIDIA, I mean, if we look at the daily chart of NVIDIA, we got a bear flag we broke down yesterday. We're basically flat to positive today. But again, here's your all-time high. Here's where we currently sit. We're literally $30 off our all-time high on NVIDIA. You then throw in names like Microsoft. Look at Microsoft. $554 was the high in October. It's trading at $482. We look at Meta, right? Look at Meta. I mean, look at this breakdown on Meta here. Tesla's still hanging in there. Tesla's doable. I mean, listen, it's not back at the 2024 highs, but this one actually could, if it breaks out, make a run in early 2026. We'll have to see if Elon has anything up his sleeve that gets people excited enough for that. But ultimately, again, guys, if we look at these different plays, right, we can very clearly see that the big cap, the trillion-dollar names, and here's Broadcom breaking down. You can see the drop on earnings. These are seeing a money rotation away, and we're looking at names like Chipotle, right? We're looking at names that have been beaten down. Lululemon's rallying today on the back of earnings. These are the ones where money is going, and I think that's going to continue in early 2026, away from big cap tech towards the beaten down players. Now, here's where we talked about how Broadcom initially popped because they beat on earnings and revenue. And this is where, again, margins were getting dissected, not looking so good. And look at the drop on Broadcom. Now, take a look at this chart. This is a chart I talked about yesterday, guys. I literally gave you the game plan on this. I said, listen, Broadcom is into major resistance. That dictates that it should ultimately pull back here. In addition, I said yesterday, don't be surprised if initially on earnings it pops up and then look for a drop back down. Well, let's go back to the chart, right? So number one, here's that trend line I was using. I mean, look at this. Perfect from the pivot high in December 2024 to the high before the liberation sell-off, or I should say this is the high in September. And then what did we tag just a couple days ago? Right up here. In addition, we go to the after hours. It did just that. It rallied up, getting as high as 424 and then dropped to the downside. So that was awesome. Another great call from yesterday's trading game plan here. I said, look to play this as a trade off of this low. I played it with the live day trading room. We made a good score on Oracle. We bought it right down in this level, and look at that bounce. Today it's pulling back just slightly, but great technical trade opportunity for anyone who paid attention in yesterday's My Trading Game Plan. By the way, I do give you guys some great levels. Granted, sometimes I'm wrong. That's just the nature of it, but it's all about probabilities. Remember, the way I analyze charts, it's not about hopes, dreams, and fears. It's about data and charts, which gives us probability. And so the idea is if I can look at charts and I can say, okay, there's a 75% chance this is going to make a move, I just continue to put my money on the 75%. It still means 25% of the time I'll lose, but it means overall out of 100 trades, 1,000 trades, 1,000,000 trades, the win rate takes you home to what I call the promised land or the profit land, right? And that's really what investing and trading should be about. Probability, not hopes and dreams. Okay. So Oracle was awesome. AVGO was awesome. Let's take a look at AVGO again on the daily chart as, again, it's falling. I have isolated down a level if it falls sharply today where I would be looking. Look at this beautiful wedge pattern marking highs and lows. And so if today, for some reason, we get down to about 360, I don't know if it'll happen, but 360 would be a great opportunity for a quick trade to the long side, maybe even a multi-day bounce if it gets into that level. And again, all I'm doing is using the simplicity of trend lines, which give me the ability to pick highs and lows with a high probability. Lululemon, big pop on Lulu. This has been a beaten down chart. Wasn't at its lows, but it was pretty darn close. Great move up. Again, in terms of a shortable level here, I mean, you could look at the gap fill right here, guys. Again, gap fill right at this 206, 207 level. It's been already there pre-market, so I am not. My level is going to be right up here at 225 to 226. If it gets up to 225, 226, look at all these low pivots here. There should be a significant, and by the way, this former pivot right here as well, there should be a lot of resistance. But certainly this gap filled because it's filled pre-market, not going near it. Costco reported earnings almost unchanged in the pre-market here. So again, just looking at that chart, Costco again is off of its highs, but it's still holding its key support here. If we break this 868 level, 869, 870 level, that's where the next big fall will come, where we would go down to about 794 to 795. All right, so again, really good stuff here in terms of the levels. Let's look at Bitcoin. Bitcoin eked out a small gain yesterday as the stock market rallied back. It came back up. You guys know I've been short-term bullish on Bitcoin as we are in this bear flag consolidation pattern, right? So again, as long as we stay in here, I think we march towards this area right here and right over here, and it gives us this zone. Once we get up to, let's say, 98 to 100,000, that's where I would be more cautious because that's where the charts tell me that it could get rejected. But right now, that is what I'm seeing. Now, listen, is it possible that Bitcoin doesn't get there? Absolutely. And how will I know, right? I mean, how will I know a chart pattern is failing? Or maybe in this case, it's actually playing out because it's a bear flag, right? So a bear flag is sideways to up usually, which gives you opportunity to make on the long side, but you have a ticking stop clock, right? You have to say, okay, this pattern eventually is going down, so I don't want to overstay my welcome. The way you know is very simple. We have a trend line right here connecting low to low. If we break below here and confirm, then you start your next move down. So again, you have a very defined ability to read the charts, and that's really what it's all about. So many investors, we guess at things, we hope. You know, we hear on social media hype and it gets us all pumped up. We jump in, etc. The idea of technical analysis is simply to do everything based on the chart. In other words, I don't tell the chart what it's going to do. The chart tells me. If I ever try to tell charts, I'm usually wrong, just flat out. And listen, the charts occasionally fail, right? Patterns can fail. But the idea is I'll be wrong much more if I try to force my opinion on the charts versus letting the charts speak to me through their candles and their trend lines. Okay, going to a couple other things here. Let's take a look at ETH as long as we got a little time today, folks. ETH again, we talked about this. We had that great move up. I did take profits with Smart Money Crypto members at verifiedinvesting.com where we swing trade this. It had an amazing move. This is where we bought it right down here, right with this technical level, and then we unloaded it right into this 3,400 level a few days ago. I do think there's still a chance that ETH could go a little bit higher, but look at this level right here. See this right here, hot, low pivot, and then look at how when it broke down, it retraced into that level and got rejected. Therefore, that tells us this should be a rejection potential play setup on ETH right there. Gold bull flag continues to break out or push up. We talked about this, right? I mean, I've walked you guys through this chart beautifully. We talked about the wedge pattern. I thought it could go lower, but the chart told me differently, and I relayed that to you guys, right? Very clearly, earlier this week, we talked about the breakout on the daily, the confirmation, so the breakout was confirmed, the bull flag, and what is a bull flag? It tells you price is going to go up, and there it is. It's working out perfectly. Amazing how charts really do guide us. They're not perfect, but they certainly do guide us. Upside, big resistance is going to be around 4,400. Let's watch and see. Can gold get through that level? Now, silver is just a powerhouse here. Silver has been defying trend lines and levels here recently. Now, in all fairness, part of that is because silver is more of the emotional metals trade, right? It's if you look at gold, platinum, palladium, silver's kind of the one that's cheapest, right? In fact, it is cheapest, so it gets more retail involved. When retail gets involved, you get scenarios like with GameStop in 2021, right? Where it just goes up, where it doesn't make sense anymore, but it just keeps going up and going up. Now, eventually when it does correct, just like GameStop, you'll see a big flush out. But right now it's going to the upside. I want to show you this. So I have this trend line. Notice how this trend line has a pivot low to pivot high, and look at how it respected it until it broke through. What I do is I use that as my midpoint or as my parallel. And this is what gives me my next level. If we drag it and we drag it to this high, this is where we could be headed if it continues to rally, you're looking at around 67, 68, depending on where we are along this. That would be a resistance level on silver. All right, so we'll keep an eye on that one as it continues. But right now, silver trading just around that $65 per ounce level. By the way, one other thing, I was doing a video today on my own YouTube about silver and gold, and I put out multiple videos a day, so make sure you check that out. But really, one of the things that I was looking at was I was looking at past big runs in silver, and I was saying, okay, well, what would vertical moves, right? We have a vertical move here. Let's go to our weekly chart here. And if we say, like, here was a vertical move, and it was 150%. All right, here was a vertical move. This was a vertical from right here. It was just vertical up, much like what we have right here, right? And so this was about 175%. So it seems like these are kind of these moves that you can anticipate. And if we look at this from the April low this year, we say, okay, well, where are we? We're at about 130%. And so it does give us the odds that, I mean, we could get up to about, like, kind of like we just showed, 68, maybe even a little bit further to 150%, maybe even around $70 to $71. And again, a lot of speculation, but that's what we do, right? We use charts to kind of make our speculation. Like, a lot of times you'll go on social media and you'll hear, like, people swearing by, oh, it's going to 100. Oh, no, it's going to 500. Oh, it's going to 1,000,000. I mean, how many times in Bitcoin have we heard about that, right? The price target still from like 3 years ago that it was supposed to hit by the end of, actually 4 years ago in 2021, was $1 million by the end of 2021. You know, the key is, in technical analysis, we make educated analysis bets, right? We say, okay, well, based on facts in the chart and history, what is the likely scenario? And what it does is it keeps us grounded, because a lot of people, they hear these upside targets and they'll be like, all right, I'm just going to believe it's going to go to X amount. And then it doesn't get there, and then it goes down, and they're like, oh, crap, what's going on? Very important to understand and keep it grounded, and that's what the charts do. The charts keep us grounded in a better reality than otherwise. Okay, a couple other charts here. Oil continues to be a little bit on the weaker side after attempting a breakout last week where it did not confirm. We continue to be right here. We still are trading in this kind of cup and handle, but again, it's more of a ladle at this point. Still bullish. It should have probably broken out. Again, if you're looking at this as a bullish pattern, you don't want to see the low taken out, right? So around $56 a barrel. If it breaks that and closes below that, then it likely breaks lower as well. As long as it holds in that range, it's good to go. Take a look at this, guys. Natural gas continues to come in. I've been inching in ever since right in here. I've been inching in. I'm going to look to add if it goes a little bit lower into this level as well. Not that I'm a big fan of natural gas mid to long term, but just in terms of the drop. I mean, this is a big drop here. And so, again, I would be looking for a bounce on natural gas. All right, guys. So lots going on here in the markets. Again, even though we're getting towards the holidays, the odds favor, listen, the complacency, the VIX is it's breaking 15 on the VIX. Again, I've seen it lower in my career, 27-year career, but not very often. Once it gets below 15, it's in the warning zone where there's so much complacency that almost anything can be popping up that freaks people out that they weren't expecting. So just be aware. Usually, again, you buy the VIX below 15, it usually pops up. Question is, does it go to 30? Does it go to 25? Does it go to 50? We'll have to watch and see. But below 15 is a great, in my opinion, my humble opinion, is a great accumulation zone on the VIX. All right, you guys have a great rest of your day, folks. Thanks for tuning in to My Trading Game Plan. I will see you all later for the weekly wrap-up. Take care.